Hey everyone, and welcome to the Pivot Boss closing report for February 18th, 2016. I am Frank Ochoa, aka Pivot Boss, with analysis for the current session here. Taking a look at the daily session of the ES, you can see right here that price has continued to push higher. We saw a push beyond the 1921s. We nearly reached the 1939 zone, and then price kind of gave back and closed at 16.5 here. But overall, we knew that when price rallied into this HVN, we were likely to see price perhaps auction back and forth around that level because after seeing rejection down at these lows, you usually go back to acceptance in order to conduct business, and that's kind of where we are right now. Overall, we still continue to see a pattern of higher lows day over day and higher highs day over day. So the uptrend remains intact overall. And I do believe that we will continue to watch to see if there is any significant rejection on these highs. If price can't see any acceptance beyond 39.5 or especially 1950.5, the expectation would be for another return back toward recent lows between 1800 and 1811. So we're going to continue to watch this very closely. Now, if you take a look at the intraday time frame here, you can see that early on I talked about the key range, that overnight key range there, and how it developed. Prices basically saw the overnight range come from 17 to 31.75. Prices failed to hold above the top of the key range, offered retest there at the key range, went offered all the way back down, and then from there prices basically traded, well within the lower distribution of that range. So right now we're kind of seeing how this plays out heading into the upcoming session. If we want to get in here and delete this and kind of remove some of the analysis, you can see where we are. Basically, uptrending market has a higher value relationship day over day with the pivot range here. Typically speaking, when you pull back, you want to defend and buy. However, after this digestion day now, you need to be able to see a continuation. Above 1926 likely squeezes toward 39.5 with a shot at seeing 50.5. So that could be in the cards here. Given that we have a holiday shortened week, there's a good chance to reach the 100 expansion target just because we've already seen the weekly target be reached. So we have a shot to see at least a continuation toward 1951, and that would easily capture that 50.5 that we're talking about. So it's well within the realm of possibilities here for price to push forward toward 1951 in the upcoming session. Any failure to hold above 1910 opens up a return back toward recent 5-day VPOC, which is 1889.50. Okay, let's take a look at crude oil. Here's crude oil in a daily time frame. Obviously, we've been in a significant downtrending market in this product. If you bring up the pivot-based EMAs here, you can see that every push back into the trigger zone has led to selling pressure. Pull back into the trigger zone, selling pressure. Right here in that area, selling pressure. Right now, we're trading in that zone, and for the third straight session, price pushed above the lower EMA, getting into the trigger zone, but closed below. Pushed above, closed below. Pushed above, closed below. So this is the third time in a row where we're seeing a little bit of rejection here. Overall, the idea is if price can't take this HVN bid at 33.65, the expectation is that price will seek a downward price discovery phase to either create new value or to find that rejection point down there. So basically, you're going to see price auction downward to new value, to lower price levels to find value, and that's going to be what happens here if price can't take this 33.65 bid. Pushing through this zone and closing beyond it would open up a return back to 35.75, which was our initial idea based off of this squeeze event that happened below the previous key level low here. That level, once you squeeze, usually needs to move back to the midpoint of the range. That's 35.75. So that's indeed what could happen here, but we got to keep in mind that the overriding downtrend has been more significant, and right now we're right in that trigger zone around value. So the key level to watch here is 33.65. Okay, if we take a look at the intraday time frame, you'll notice here that prices in crude oil also played off the overnight impulse move. What was important about this one was that price pushed beyond the high, rejected off the upper 25% expansion, dropped back below, came back and formed a lower high right here at that previous high, and then prices drop. pulled back to the inner 25%, and then defended for new lows. So this thing kind of played out according to that early blueprint, and that's what we had you look at this morning. So nice if you were able to follow that, because it definitely helped identify the key levels to watch. Overall, prices did pull back, and now you're seeing a move here into 32.44. Obviously, we've had an upward higher value relationship here with the pivot range as each one has continued to move upward. So the pullback to the bottom of that range still offers an opportunity for bulls to defend. But if you can't hold there above that 32.44, you could open the door here to a quick test back at previous 5-day VPOC at around 31.40. Taking a look at gold futures here. Gold futures got a big time squeeze. We were looking for this one to see one last squeeze into perhaps 1239s and 1263s, and today we saw that squeeze. So basically we had an extreme reversal pattern that formed here, big time push down, small digestion day here. That's an extreme reversal signal, and that usually leads to a snapback reaction. We saw that today. I mentioned above 1215 squeezes into 1239s, and right there you have it, a big time 20 plus point move into that zone, and then we could see a follow through into the highest levels here. So overall, if price can remain above 1215 to 1220, the expectation would be for a follow through toward 1263. In essence, what I'm thinking here is that prices basically forming a distribution at highs. So we saw a long period of accumulation here. We saw the markup phase, then you saw the blow off top and the quick rejection. That sets the range, and now you can see a potential distribution form at highs until the next key move occurs. So that's what we're looking for now. All right, if we look at the intraday time frame, you can see this is the key coiled up wedge that we were watching here. We were watching this wedge, and I said above 1215 squeezes, below 1200 slams. Well, it got a push through 1215s, and you saw it was a steady markup the entire way, right back to the previous week's close. Tried to get above that level and then closed the session below it. So overall, if you squeeze like that, the idea is that any pullback should likely be defended for a continuation higher into 1263s. So we'll be watching for a potential pullback opportunity back between 1215 and 1220. Right now, 1232, 1231, that's still a very important zone in the intraday profile. So price may never even get back below that. We'll see. But the idea is look for a pullback to occur, and that pullback could be a swing buying opportunity. Now keep in mind, if price can't get above 1242s very quickly, then this might be a right shoulder kind of event where we're headed much, much lower back to 1200. Okay, let's take a look at the NQ now. Here's the NQ in a daily time frame. What we were looking for just a week back was based off of this significant rejection tail that occurred right here off the bottom of the August low range there, the 38.93.5. That's the August low. Price attempted to hold below it, snapped back above, and formed a significant rejection tail. I mentioned if bulls can defend a pullback here, we could see a continuation into 42.26. Today we achieved that target, 42.26s, almost right on the button, and that's a precision move again that we've seen based off of the outer edges of this key range. So a solid move into our target. Now we have to see how price is going to respond after reaching this target. We could see a continuation toward the top of this key range here, 43.09, or back into 42.81s. So we could see a continuation higher before this thing falls off. But additionally, we are seeing pullbacks be defended right now. And we have an upper line that starts to come into view here, something like this, where prices are kind of going like this right now. And if we can't get any acceptance above this 42.26 quickly, we could be looking at another round of new lows ahead. So right now we're going to watch to see how this plays out around this zone. 42.26 is the key level. Below it, forecast another return. Above it, acceptance above that zone could open up a move back into 45.58. All right, let's look at the intraday time frame. In this one, we also identified the key range to watch in pre-market. Basically, that key range from 41.82.5 to 42.17.75. Price rallied into the upper 25% expansion and then sold off into the bottom. Built up a lot of energy. Here's the 50% expansion back to the bottom, and eventually 100%, which is the absolute downside target. So played out perfectly according to that blueprint. Overall, this was a downtrending market for the NQ, and the expectation would be that if price pulls back into an LVN here, this could be an opportunity to defend for swing bulls looking for another round of strength above 42.26. Otherwise, any return back into 41.96 to 4200 could be an area seen as a selling opportunity for a drop back toward 4,000 upon trapping participants here above 4200. So there's a couple of ways to watch out to see how this plays out. So we'll watch these zones on both sides and see how they play out for further activity moving forward. All right, that's it for now. Let's see how this thing plays out heading into Friday's trading. Good luck and trade well.